Ever pondered over the idea of investing in ETFs? Well, you're not alone. The world of exchange-traded funds can seem like an intricate maze to beginners. But fear not, this video is here to guide you through the labyrinth. We'll delve into what ETFs are, how to get started with investing in them, which platforms to use, and the pros and cons to consider. So, buckle up for a journey into the exciting realm of ETFs. Stick around and you might just become the next ETF aficionado. First off, let's unravel the mystery behind the acronym ETF. ETF stands for Exchange Traded Fund. Now that might sound like a mouthful, but let's break it down. Imagine a bustling stock exchange filled with traders shouting and gesturing. In the midst of all this, an ETF is a calm, collected player, a type of investment fund that's traded right on these stock exchanges, just like an individual stock. But here's the twist. An ETF isn't just one stock or bond. It's a collection of assets, which could be stocks, bonds, commodities, or even a mix of these. Picture it like a fruit basket filled with a variety of fruits. You're not buying just one kind of fruit, but a little bit of everything. This way, you get to taste the whole spectrum without committing to a single type. The goal of an ETF is to track the performance of specific indices. An index is like a yardstick, a measure of a section of the stock market. So if an ETF is designed to follow the S&P 500 index, it will hold the same stocks as the S&P 500 in the same proportions. It's like having a mini S&P 500 portfolio all in one neat package. In simpler terms, when you buy an ETF, you're buying a basket of assets in one go, not unlike buying a fruit basket instead of individual fruits. So you're intrigued by ETFs and want to start investing, but how? Let's break down the process into 5 digestible steps, like baking a cake. If you're not into baking, don't worry. This recipe is easier than whipping up a souffle. The first step is choosing a broker. Think of this as selecting your kitchen. You need a space where you can comfortably mix your ingredients, right? There are many brokers out there, each with its own set of tools and functionalities. Some popular names include Fidelity, Vanguard, and Charles Schwab. Your choice depends on your personal preferences, like the level of customer service you desire, the platform's user-friendliness, and the fees associated. Next, you need to open a brokerage account, which is like preheating your oven. This step can usually be done online and typically involves filling out a form with personal information. Remember, this is a crucial step. You wouldn't want your cake batter sitting on the counter with no oven to bake it in. Now that your oven is preheating, it's time to deposit funds into your account. This is your cake mix. You can't have a cake without batter, right? The amount you deposit depends on your financial situation and investment goals. The fourth step is selecting which ETFs to invest in. This is like choosing your cake flavor. Do you want a vanilla ETF that tracks the S&P 500? Or are you more of a chocolate lover leaning towards a sector-specific ETF? There's a variety to choose from, and your choice should align with your risk tolerance and investment objectives. Finally, you're ready to place the order. This is the equivalent of popping your cake into the oven. You can place a market order to buy at the current price, or a limit order to buy when the price reaches a certain point. Remember, each step is crucial, like ingredients in a recipe. Miss one and your ETF investment cake might not rise as expected. Where do you go to invest in ETFs? Let's explore. The world of ETF investing is full of various platforms, each with its own unique features. Some of the most popular platforms include Vanguard, iShares, and Schwab. Now, it's important to note that we're not endorsing any specific platform. Rather, we're giving you a starting point, a launchpad, if you will, to begin your journey into ETF investing. Vanguard, for instance, is known for its low-cost ETFs. On the other hand, iShares offers a wide array of ETFs to choose from. Schwab, meanwhile, is praised for its robust research tools. However, the best platform for you will depend on your specific needs and circumstances. Are you looking for a wide range of ETF options, or are you more concerned about cost? Do you value research tools or prefer a simple, straightforward platform? Choosing a platform is like choosing a car. It should suit your needs and style. Like everything else in life, ETF investing also has its highs and lows. Let's start on a positive note, shall we? The first pro of ETF investing is diversification. ETFs allow you to invest in a variety of securities, such as stocks, bonds, or commodities. This means you're not putting all your financial eggs in one basket, reducing your risk. The second pro is flexibility. ETFs can be bought and sold throughout the day at market price, just like individual stocks. This gives you the freedom to react quickly to market changes, something that traditional mutual funds don't offer. Lastly, ETFs typically have lower expense ratios compared to mutual funds. This means they are cheaper to own, which can significantly boost your returns over the long run. But as we know, every silver lining has a cloud. ETF investing is not without its cons. Firstly, there are brokerage fees. You need to pay a fee every time you buy or sell an ETF, which can eat into your returns if you trade frequently. Secondly, ETFs can sometimes deviate from the index they're supposed to track. This is known as tracking error, and it means your ETF might not perform exactly as you'd expect based on the index. Weigh these pros and cons carefully to make an informed decision. Remember, every rose has its thorn. So, are you ready to dive into the world of ETF investing? We've explored what ETFs are, how to get started, and even weighed their pros and cons. But remember, while this guide provides a good start, always do your own research before making any investment decisions. Investing is not a sprint, it's a marathon. If you found this video helpful, remember to hit the like button, subscribe for more, and leave a comment about what other investments you'd like to learn about. Until next time, happy investing.